So, what is target costing? See, we are living in a competitive world, right? For every product, there are close substitutes. So, how do we survive in the market? We cannot determine the selling price by ourselves as a producer. The selling price is driven by market forces. The selling price is driven by market forces. Okay. When the selling price is driven by market force, which is not in the control of the organization, how do they maximize profits? How do they maximize profits? By controlling cost. By controlling cost and later taking measures to reduce cost. So, profit maximization is possible by reducing cost. First is controlling cost. First you have to control, then only you will take measures to reduce. So profit maximization is possible by controlling cost in the short run. By controlling cost in short run and reducing cost as a longer run objective. And reducing cost in the long run. Okay. So, how is it achieved? It is made achievable by setting a target. Now, today you are all here to study SEM for a target of completing CMA Group 3 by this December, correct? So, you are approaching towards the target. So, what is target costing? You should set up a target cost in the reverse working. What is the reverse working? We all know cost plus profit equal to sales. Having known the sales minus the profit which is desired by the organization, I will bring my target cost and I will ensure that my cost of production does not exceed the target cost. Target is set up for the maximum cost the organization can incur for the production for the period. By doing so, the profit can be maximized. That is the concept of target costing. Okay. So, what is told in target costing? Target cost is set up as the sales which is driven by market forces minus the targeted or the desired profit. Okay. So, by setting the target cost, organization sets a maximum limit for the cost to be incurred. For the cost to be incurred. A very, very simple concept. Did you understand the concept? Shall we move? Right. Illustration 41. CELO company has the capacity of production of 80,000 units, presently sells 20,000 units at 100 each. The demand is sensitive to selling price. It has been observed that for every 10 rupee of reduction in selling price, the demand is doubled. What should be the target cost at full capacity if the profit margin on sales is 25%? What should be the cost reduction scheme at full capacity if at the present level 40% of cost is variable and the total fixed cost is 36 lakhs? If the rate of return desired is 16%, what is the maximum investment at full capacity? So, how much is the total capacity given? Total capacity is given as 80,000 units. So, how much are they operating at present? At present, they are operating 20,000 units for a selling price of rupees 100. Okay. So what is the pattern? The demand is sensitive to selling price. It is observed that for every reduction of 10 rupees in the selling price, the demand is doubled. So for 90 rupees of selling price, the demand becomes 40,000. And for another 10 rupee of reduction, for 80 rupees of selling price, 60, double na? Double. The demand becomes 80,000 units. Okay. So, question, what should be the target cost at full capacity? What is your full capacity? 80,000 units. For that 80,000 units, how much is your target cost is the question. We know the target selling price is rupees 80. Sales minus profit will give you target cost, right? So, how do you measure this profit? That profit is given as 1/4 on sales, 25% on sales, which means it is 1/3 on cost. Do you know how? 25% is 1/4. 1/4 on sales is 1/3 on cost. Do you all know how? 25/75, because we all know cost plus profit equal to sales, right? So, if suppose the sales is 100, profit is 25%, which means it is 25, which means cost is 75. This 25 in relation to sales is 1/4. This 25 in relation to cost is 1/3. Okay. So the profit is 1/3. So 80 divided by 3 gives us 26.67, which means how much is your target cost? Oh, otherwise sales now. Sorry. The given information is sales only. I'm so sorry. So 80 into 25%. What is 25% of it? 20. So what is your target cost then? 60 rupees per unit is your target cost. This is first subdivision of the question. What should be the cost reduction scheme at full capacity if at the present level 40% of cost is variable and total fixed cost is 36 lakhs. Okay. So what is the nature of variable cost? It will remain constant per unit. Right. So first step will be to find the variable cost per unit, for which they have told at the present capacity 40% of cost is variable. So what is told as the selling price? Selling price at present level is given as rupees 100. Okay. At the present capacity, 40% of cost is variable. 40% of cost or 40% of sales? 40% of cost or 40% of sales? 40% of cost. So, minus profit. What is the profit percentage given? 25%. So, 25 rupees, which means how much is your total cost? Total cost is 75 per unit, and on that 40% is variable cost. Okay. So how much is variable cost per unit? 30. Okay. Variable cost per unit is 30 rupees. This I am doing at the present level because they have told if at the present level 40% of cost is variable. So find the total cost at present level because you have to take the present selling price and find the variable cost per unit. Now, what happens? The question is, what should be the cost reduction scheme? So how much is my target cost? Okay. So for 80,000 units, how much is my variable cost? 80,000 into 30. 80,000 into 30, 24 lakhs. This is variable cost. How much is fixed cost? Fixed cost is given as 36 lakhs, which means how much is your total cost? Total cost is 60 lakhs. So for the full capacity, how much is your target selling price? For full capacity, how much was your target selling price? What blinking, everybody? 80. How much was your target selling price? 80 rupees per unit. So for full capacity, target selling price being 80 rupees, the target sale value will be 80 into 80,000, which is 64 lakhs. How much is your target profit? 25%. 25% on sales, which means how much is it? 16 lakhs. Okay. Which means how much should have been your target cost? Sorry? 48 lakhs. Target cost is 48 lakhs. How much is your current total cost at full capacity? Total cost at full capacity is 60 lakhs, whereas your target cost is only 48 lakhs, which means how much of cost should you reduce? 12 lakhs. Now, did you understand? So, target cost, total cost at full capacity is 60 lakhs, which means 12 lakhs will be your cost reduction. Did you understand? Have they shown it as a percentage? No. Cost reduction required. Did you all understand? At full capacity, they are asking how much of cost reduction is required. For the cost reduction, you should know the total cost right now at full capacity, for which they have told the fixed cost. For variable cost, they have given 40% of cost is variable at the present level. So, for the present level, subtract profit to know total cost. On that, 40% is variable cost. What is the nature of variable cost per unit? It remains constant. So, 30 rupees per unit into 80,000 units will give you total variable cost plus total fixed cost gives you the total cost at full capacity. But we know the target selling price and the target profit. So you will know your target cost. Compare your target cost with the total cost at full capacity. You will know how much of cost is to be reduced. Did you understand? Understood? Right. Then C subdivision. If rate of return desired is 16%, what will be the maximum investment at full capacity? So they have given what is the maximum investment is the question, right? What is the target sales? Target sales is target cost plus target profit. Okay. The target cost is 48 lakhs. The target selling price is 80 into 80,000 units. Right? Which means how much is your target profit? Enema? 16 lakhs. 16 lakhs becomes your target profit. For this target profit, what have they told you? If rate of return of 16% is desired. So, investment into the rate of return will give you profit. Investment into rate of return will give you profit. That investment I do not know. Rate of return is 16%. Is equal to 16 lakhs. which means how much is the investment required? 1 crore. 16 lakhs divide by 16%, which is 1 crore. Did you understand?